Welcome to the Idaho Business Podcast, where we talk with local entrepreneurs, share motivation, network with one another, and pick up a tip or two on how not to burn your business to the ground. I'm your host, Spencer Ward. All right, everyone, and welcome back to the Idaho Business Podcast. You know what it is at this point. If you're tuning in for the first time, I'm the big goofy dude that talks about business in Idaho. But let's get into it. We're sponsored by Health West, great organization, great medical attention that you get there. See what they can do for you and your family and loved ones. They do a great thing for our community. They have programs for lower income individuals that can assist with those costly medical bills, and they're just fantastic. Give them a holler. We're also sponsored by New Clean Commercial Cleaning, my company. If you need any janitorial needs, let us know. Give the call at 208-254-7070, servicing you anywhere from Twin Falls all the way down to Rexburg at this point. So, I was thinking about this topic this last week because I'm just getting finished up with building an investment property. It's a fairly large project. Definitely wasn't cheap. And I wanted to talk a lot about, getting yourself ready for opportunities like that as a business owner, or even for an exit. The problem exists for both scenarios that you need to do a couple things right. And let's talk about, stop writing yourself out of opportunity and the real cost of chasing write-offs. Okay. We've talked about this before, but this is huge. We are literally kneecapping ourselves by doing certain things in our company and writing every ounce of profit off. And we're thinking, heck yeah, no taxes for me. But that's all it is. That's all it is you're saving on the tax bill. But then what happens is it's quietly killing your ability to get financed, to buy real estate, acquire other businesses, bring in partners or investors. They will not be attracted to any business without showing profit in your tax returns. So, it's one thing too, is that, I can show you profit in my P&L. Great. But they don't care about that. Honestly, and us business owners understand this, that we can see profit in our P&Ls. We're trying to do this and that. But if they don't see it in your tax returns, your actual tax returns, no bueno. Okay. So I just finished a major investment property. None of this would have been possible if I didn't show profit in my tax returns. So if you can write off, if you just write off everything to avoid taxes, lenders don't see a strong business, they see a hobby. So keep that in mind as we go through this episode. So why banks don't care about the tax savings that we're always talking about. When lenders underwrite you, they're not impressed by clever write-offs, zero taxable income. My CPA says it's fine. Of course. You can find any CPA that says, oh, that's fine, just do it this way. They care about cash flow. They care about consistency, add backs that they can trust, and a business that stands on its own. Okay. I went through this financial vetting process to get this building financed. I'm not, I'm sure there's people out there who can cash flow the whole thing, but I'm not one of those people. It was a hefty bill. And when you're a business owner, you want to keep cash in your business. So financing is a smart option. And that's exactly what it is. It's a full-on physical this vetting process that banks put you through. And that's a whole nother episode altogether. We can take a deeper dive in the underwriting world, and I'll try to get a banker on for this upcoming episode. But they put the rubber gloves on. And I know you business owners know that. And I'm sure many of you sat across the table from these bankers saying, hey, I'm profitable. See, I've got this money, X, Y, and Z over here. But they don't care. They want to see it in your tax returns. So you don't build wealth by hiding income. You build it by proving it. Okay, so let's talk about foolish write-offs that's costing you opportunity here. This is where owners shoot themselves in the foot and don't even realize it. Okay, foolish write-offs. Let's go down the list. These are red flags for lenders and lawyers. Personal groceries. Number one would be personal groceries, Costco runs, family dinners. Number two, kids' clothing, sporting fees, gymnastics, dance, camps, Number three, family vacations labeled as conferences. Uh, and to a side note of that, you talk to your CPA because you are allowed, if you own your business with your spouse, you're allowed a company retreat every year, and it's tax deductible. And yeah, if you go on that and you go somewhere fun, great. But just remember, you have to document what you talked about with the business. So if you do get audited, they're going to ask, okay, show me the notes of what you talked about and discussed at your corporate retreat. Um, Number four, home utilities with no allocation or documentation. Number five, personal credit card balances running through the business. No, no. Number six, spouse on the payroll with no real role or timesheets. Uh, Number seven, boats, ATVs, campers with zero business justification. Um, what am I at now? Am I eight or nine? Excessive meals, entertainment, or lifestyle smoothing. Paying personal debt for business accounts. Okay, so there's, I think, around 10 points right there. So this is it. This isn't clever. It's being sloppy. Okay, so be careful with what you're doing here. So, and here's the real risk most people ignore. There's something called the piercing the corporate veil. This is when personal and business finances are intertwined. So if you get in a lawsuit and someone's suing you, when they can do is when they call it piercing the corporate veil, they can literally pierce your entity, your business entity, and reach into your personal pockets and pull things out. And you're thinking to yourself, no, 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 no. That's why I have an LLC. I'm limited in my liability at this point. Great. But when you're using it as your personal banking piggy bank, and you're using it for all these different personal fees, they can show, hey, it's all intertwined. I have access to the personal expenses and the business expenses if someone wins a lawsuit against you. So you'll hear this with an attorney. So ask your attorney about it. I'm not lying. It's called piercing the corporate veil. So what this is the assets protection gets weaker. It weakens. Lawsuits get uglier. Audits get harder. Buyers walk away, and banks lose confidence. You didn't build an LLC or corporation just to treat it like a personal checking account. So now let's get into smart expenses versus legitimate ad backs. Okay. And I'll throw a disclaimer out there because I am not a CPA. So obviously ask your CPA about all this kind of stuff, ask your attorney about this stuff, but I'm sure this is going to be 98, 99% accurate. I've been around for around 14, 15 years or longer now in the business world. Uh, and I've learned a few things. So let's be clear about overpaying taxes. It's about being strategic instead of emotional. Um, all right. So reasonable ad backs lenders often accept are, well, let's get into this first. They don't kill a deal when properly documented. Let's do this. But they are, number one, owner vehicle. So especially if you use it to visit job sites, property clients. Number two would be health insurance, especially if you used to visit job sites, properties, clients. Number three would be insurance, life insurance, particularly a key person or owner policies, one-time legal or professional fees. That's fine. So professional fees would be someone like, hey, you're hired a coach to get better at marketing or get better at whatever it is. That's professional fees. I like, you can break them down because I don't like those to be broken down as the same category. Many people put them in the same category as with their attorneys, and that's fine. But I like to show, I call one professional development and one, what is it called? Professional services. So in professional services, I'll put my attorney and CPA and a few other things you can do there. Professional development is literally just your consultants, your coaches that you put in there. And you can do it that way because professional development isn't all it's a it's a write off obviously, but it's an add back. If you go to sell or the banks are looking at that, it's like, okay, I don't need that to operate the business, so I can add that back into the adjusted EBITDA of what they are calculating to buy your company at a multiple of that EBITDA. Okay, let's go going down the list. here: depreciation and amortization, non-reoccurring expenses like startup costs, relocation, or one-off repairs. Those are things it can be discussed. Owner compensation adjustments, especially if it's above market. Home office needs to be properly allocated. The difference is documentation, consistency, and intent. Banks don't expect zero expenses, they expect clean logic. Okay. If you're showing zero expenses, like, hey, they're going to have some red flags up in their headquarters. This is not their first rodeo as well. Um, let's get into the expert's perspective here. This isn't just opinion. CPAs and financial pros say this constantly. So there's a guy I follow on Instagram. His name's Dennis Carlton. He says the goal isn't to eliminate taxes at all costs. It's to optimize taxes while preserving your ability to borrow, grow, and exit. There's another commercial lender principle here that says, show me a business with no taxable income, and I'll show you one that can't be financed. And then one more is your tax return is the report card lenders and buyers read. So smart owners plan 3 moves ahead, not one filing season ahead. So as you go forward this week, and as you're trying to get things accomplished towards the end of the year, especially as you're filing, think of this. This is a perfect timed episode because many of us are meeting with our CPAs to think, okay, let's go through what I'm going to have to owe. Let's do some tax planning. And you honestly, guys, if you don't have a CPA that's bringing you in before December to do a little bit of tax planning as tax strategy, you probably need to do a different CPA because they're pretty much just a TurboTax type of person. If they're just having you come in at the end of the year, be like, okay, what do? We just plug it all in this way. No, you have to have someone with some strategy. And honestly, I use Dan Packard over at Cooper Norman. These guys are fantastic. And you need someone that's going to stand behind you if you do get an audit. That's what brings personal comfort to me. So talk to your CPAs about this kind of stuff. See, how can I adjust it so I can start showing profits, so I can get financed, so I can sell my business eventually, so I don't have to die in the bowels of my business without ever being able to sell it. Because honestly, I'll tell you right now, from someone who has done a seller finance deal, if you don't show profit in your tax returns, the only option is to show, profit in your P&L. It has to be vetted still, but the only option you have, honestly, is a cash buyer, which are, far and few between, and a seller finance option. If you're not showing your profit in your tax returns, those are your only options when it comes down to it. So if your goal is to get into bigger deals, real estate acquisitions, or future exits, then you have to stop playing defense and with taxes and start playing offense with opportunity. So paying taxes isn't failure. It's proof that your business is real, scalable, and bankable. So this next episode, hopefully I'll find a banker and we'll break down what lenders actually look for during underwriting and how to prepare before you need the money. Okay. This will be key. So remember, don't write yourself out of the game. Build a business that can stand scrutiny, attract capital, and open doors, because opportunity always costs more than taxes. Always. So like always, guys, go out there, be happy, be grateful, and find opportunities to serve others. Have a great rest of your Christmas season, and have a great week. See ya. That's it for today's Idaho Business Podcast. Hopefully you learned something new. And if you didn't, I've got a cheat code for you. Go to theidahobusinesspodcast.com, enter your email, and get my 20 golden rules for business. It's packed with my best advice, plus it's free. Subscribe, leave a review, share this with a friend. Until next time, keep hustling, keep laughing, and keep Idaho awesome.